Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, October the 1st. The year's 2019. Let's talk trading. Monthly open. I was talking about some range and ATR over the past few sessions, and I'm not sure if everybody really understands that price has to move, and it'll move to a high and move to a low on each and every time frame. We'll have a 1 minute high low, 5 minute, hour, 4 hour, daily, weekly, monthly, and yearly high low. Not to mention all time high low. But what we want to do is we want to use that information to our advantage, and so we profit from it. But remember that these videos are for educational purposes only, and your results may differ from mine, and that trading is risky. Therefore, if you need financial advice, seek it from an accredited financial professional rather than somebody putting videos on YouTube or on some trading forum on the internet. No, you want to seek your advice from an accredited financial professional. That way, when you lose your money, you know that it was lost by somebody who had credentials, right? Okay, that's out of the way. But remember, don't lose more on any particular trade than you're willing to lose on that particular trade. So let's take a look at a monthly chart. Here we go, a naked chart. So if there's any kids in the room, you need to shield their eyes. Just kidding. Well, what is this chart telling us about this monthly chart? What's it telling us about dollar yen right now? Well, I can see that just looking at this naked chart, price went up to about the previous month's high, and that previous month was an inside bar, but then it came back down outside of that monthly wick zone and then moved south. Do you see that? I mean, the only indicator on the chart is just the changer. So there's nothing esoteric, nothing complicated here. We're just looking at a monthly chart, but we see the previous month was an inside bar and price failed to break out of it. So it hit that high and reversed. So this is on the monthly. Now, of course, we could add some things to the chart, but do we really have to? If we look back here, we can see prices cutting into some wick zones. So there's a good chance that anywhere in here, price could turn around and move up. It might reach a level. And if you look back even further, you can see here was a bounce point. There's a bounce point. So when you put the crosshairs on the chart here, you can see where it cuts through those wicks. So those are all bottom wicks. See here, there's only a couple top wicks in this area. But the question is, how can we use that information to make money? Well, as stated, it's all about the wicks. It really is when you think about it. Because at the end of the upper wick, at the top end is the high, and at the end of the bottom wick is the low. And then you have the top and bottom of the candle, which could either be the close or the open, depending on which way it moved. But remember what I stated earlier. Range. Price opens, it'll make a high, it'll make a low. Or price opens, it'll make a low, it'll make a high. And that's high minus low is the range. Well, it has to range away from the open. So that's part of the beauty of the wicks. And when price reverses, it's going to either reverse off the high or the low, which is part of the wicks. So you see, having systems based on these areas, it just makes sense. So the buy zone is based on the open and price moving away from it. The wick zone is based on price breaking out of the wick zone, and the rat zone is based on price reversing off the high and the low. And that's why we measure from. We measure from the open to close, open to high, open to low, and we measure from high to close and low to close. And that gives us pretty much everything we need to know about price. And it helps us in our trading decisions. And we can then do the analysis on the statistics of price movement, the frequency distributions. And that's where that all came from. So I hope you can just, by looking at this chart here, you can see how price moves. Because a lot of times people don't really interpret these candles. See, but this is showing price movement. We just see it as where price is and a bunch of patterns. But no, it's actually telling you how price moved. So let's move on to usually one of the first charts I show, which shows, once again, all the gaps filled. The weekly gap. When price opens, there's usually a difference between the open and the close on the week, and that gap filled. Not so much on the month, unless the month happens, the first of the month is on a Monday. Other than that, you don't really have a monthly gap. But right here, 36 pips below the open, 76 off the high. There were pips to be made here. Lots of pips to be made already on the first trading day of the month. Okay, well, we can switch this back over to the weekly, and you can see here, we broke out of the previous week's high and then retraced. But once again, look to the wicks. Okay, so you see here, we didn't break out of that high. Then we came down and we fell below this point here. That's a clue maybe to take what little profit and possibly start to think about reversing the position, going from long to short. Now, we've been talking about range, and yesterday we talked about the first day of the week is that range right here. And we say price usually has to exit that range because the weekly range is usually greater than the daily range. Actually, it has to be equal to or greater than. It can't be less. The weekly range can't be less than a daily range of that week. I mean, that's just simple logic. And what has happened? We broke out, and that was almost 29 pip break to the north. And then we broke out to the south, which looks like we've got about a 9 pip difference here. Based on one simple thing, the first trading day of the week. It's range. High minus the low. I know this might sound so basic, so grade schoolish, and you probably want some, master or doctorate level talk when it comes to trading, but it's the basics that make us money. Not something fancy. It's just like to get a black belt, you have to master 6 basic moves. Now, we've talked about this before. Yesterday was an inside bar, and we broke out of that inside bar both ways. Oh, but look here. Monthly inside bar was 1 month ago. It hit it, but didn't break it. It reversed. Now 75 pips off of that. It almost broke it, but it didn't. It reversed. So once again, trading at these levels proves to be profitable. Showing the daily range. Look at this range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, over 100 pips. Interesting. Dollar yen 81, but the euro yen only 50 pips in range. Monthly highest open right here, taking that trade proved to be profitable. But remember, these videos are for educational purposes only. And the buy zone, you see the pivot was inside the whole buy zone area. So there was no real bias. So just taking the trades here as they appeared, once again, profitable. Why? Price has to range away from the open. Rats, green rats, get ready to feast. Remember yesterday I mentioned something about the weekly pivot? Well, it hit the weekly pivot. That shouldn't amaze you. And here's the monthly pivot here. Because when we run the analysis, you see there's very few missed pivots. So on the weekly, there was actually a missed pivot here. In May, in September, 106.63, we've got a missed pivot in the weekly. On the monthly, we've got a couple this year, but look, there hadn't been a missed pivot since February 1st of 2013. That's just how strong these pivot trades are. But once again, boys and girls, your results may differ from mine. Price action, what can you say? Price doesn't like to stay between two lines, and it didn't. Why doesn't it like to stay between two lines? Because it ranges. There's only 10 pips. So if price gets in between two lines, it's going to have to exit sooner or later. Wick zone, in and out. We've talked about this almost every day. And here at the tick level, you can see we've got, about maybe 7 pips movement to the upside here. On the Einstein line, you can see not much is happening. There was something else I wanted to show you. Let's see, where is it? Nope. We talked about that yesterday. And the computer's taking its own sweet time. Okay, what do we have here? Something is goofy on this chart. I'm not even sure what that is. The opens, as you can see, price just shot right down and through those opens. Okay, once again, the ATR. Now, let's look at these ATRs. The monthly open minus half of the ATR2, which is the minimum. It's right here. And here's the open plus the ATR. So look for price to hit one or both of those levels. Because if you think about it, price has to move, right? And so if it's going to hit the ATR, then it's going to have to at least hit the halfway point in one direction or the other, or both. That's just, once again, simple logic. And showing the weekly open, once again, what a strong trade that can be. You can see here sometimes it goes and then reverses. And that's why I like to wait for it to get through the open and into the short zone or into the buy